volatility is essential, as uncomfortable as that might sound. And the reason for that is volatility is what affords us the opportunity to earn the equity risk premium in stocks long term. The 5 percentage point differential we get in stocks over bonds in the long term. It's due to volatility. Don't let volatility shake you out of the market. Don't let volatility upset you. Let's ride this out and capture the extraordinary value that we see in the market today.
Hi guys, it's Steve from Disruptive Wealth Creation. Don't panic. This clip was about volatility. But do not get confused. It was not about cryptocurrency. It was about shares. Yes, shares can be volatile too. Today we are going to talk about how to pick winning stocks. Then I'm going to list 15 of the stocks I have reviewed on YouTube in the last 6 months. And what I'd ask you to do is to write down if you would buy, sell or put those stocks on your watch list. Then when we have finished doing that, we can compare notes. There is no right or wrong answer. Right guys, so let's have a look at my Holy Grail checklist. This is just a checklist of a few basic things you need to look at when you're wanting to find those winning stocks. The first one is you need to check out the CEO and their management team, see what they're doing, what their mission statement is, what they're looking to do in the future. Secondly, you want to be looking at performance in the last 12 months and also in the last quarter. The following thing you want to look at is debt and interest payments. Can they pay their debt? Then price earnings ratio. Sometimes this won't apply to growth stocks because these companies might reinvest all their money into investments. Then have a look at institutional investors. See which companies like BlackRock or others are investing in the company that you're looking to choose. And then also have a look at what other pundits and commentators are saying about the shares. Talking of pundits, there's one right behind me called Jim Cramer. If you haven't seen any of his podcasts, they're worth checking out. Right, so now let's get into it. So the 15 stocks that I've reviewed over the last 6 months, I'm going to list them. They're above you, you can probably see them. So I'm going to go through them all, and then if you want to make a note of whether you would buy them, sell them, or just simply keep them on your watch list. And then what we'll do at the end is we'll compare notes. So the first one, as you can see, is Apple. Then you've got Broadcom, Qualcomm, Corsair, Desktop Metal, SQ Mining, Alibaba, Neo, Xpeng, Tesla, one which Jim Cramer likes to talk a lot about and is a big fan of, Coca-Cola, Square, Pinterest, PayPal and Virgin Galactic. So if you've got them all, I'm going to have a little short break. As you can see from my stock list, I have 9 stocks I would buy, 3 stocks I would sell, and I've got 3 stocks on my watch list. You might be surprised that I've sold Apple and Coca-Cola. The clue in the answer to those 2 stocks are Steve Jobs and Ronaldo from Manchester United. If you want to find out more, watch my videos. Even professionals disagree. Look at Michael Burry from The Big Short. He does actually look short in this picture. And Cathy Wood. They disagree. I think she politely told Michael Burry that he didn't know what he was talking about, even though he did get it right on the housing crash all those years ago. Anyway, lastly, my question to you is, are you a passive or an active investor? Watch these 3 YouTubers and see what they said. So let's start with Michelle Markey, personal finance investing.
Definitely.
I mean, yeah, and it's funny when you put it as active versus passive. Like when I say active, I'm always studying stocks, and if I might buy some, it might be a long time in between when I'm able to actually buy the stocks, but that's to me still considered active because I'm doing the research and homework before I buy something, as opposed to like my understanding of passive is just that you're in index funds essentially, and something that you don't have to actively keep track of yourself because someone else is doing the managing. Whereas like trading can be like in the definition of a lot of people who do trading, that's like hyperactive in terms of like a lot of people monitoring the minute by minute movements of some of their positions. So I'm definitely not a trader, definitely as much as I would like to believe a long-term investor.
Awesome.
Now let's see if Money, Whiskey and Coffee is an active investor.
I would say that I'm both. Half of my portfolio is index funds and ETFs, and I keep adding to it each month, and I don't really worry about it. I have specific ETFs that I want to, which give me an exposure to the world and specific industrial sectors as well that I want to be part of, and then the other half of my portfolio is individual shares, which I'm a bit more active into it. I do my research, I add companies into my portfolio, I remove some other companies, but it's not on a daily basis. I do it like twice a month.
I will fall into a different category. So I do have different portfolios. So I generally have a long-term portfolio where I would consider myself as an active investor to begin with, because I pretty much look at my portfolio on a daily basis, not that I'm making any transactions, but I do make plans on a weekly basis on whether I'm going to add more to my long-term portfolio or whether I'm going to add or remove something from my, swing trading portfolio.
Okay guys, so that about wraps it up. So thank you for watching this video. If you've enjoyed it, please like and subscribe. The videos come out every Tuesday and Saturday. So fingers crossed, all being well. See you in the next one.